Uh, Good evening, everybody. It's Jeff Scott. This is my top-down review for Sunday, 2/11/2018. Not sure what time I'll get posted, but you can see it's still the 10th, Saturday night, and therefore, obviously, futures are not available. What a week it was. Memorable. You know, a lot of people say when the VIX is high, it's time to buy. When the VIX is low, it's time to go. Well, the VIX is high, and so the question of the day going into Monday is, with the VIX this high, is it time to buy? I think so, within reason, and I'll talk about why as I go through here. Of course, futures may come up Sunday and change my mind, so I'm basing it on what I know and what I've got looking backwards. As always, it's for education purposes only. I'm a doctor, not a broker. I have no licenses that would allow me to tell you what to buy and what to sell. I do this purely for education. I'm independent. I pay for the tools that I use, and trading involves risk. You and your loan are solely responsible for any investment decisions you make. I do occasionally talk about some of the option strategies I like, and if you're not an options aficionado, I refer you to the Options Industry Council for their excellent advice, education, and warnings. I always like to call out the folks that I've learned so much from, and whenever I do live education, I feel that I'm no different than the audience. I'm not a guru, is what Ian used to say about him. I would say the same thing. And my goal is to learn from a lot of smart people and to help you on your journey, to become your own guru. So start with CanSlim, improved by Morales and Catcher, taken to the computer and taken further by Ian Woodward and his partner Ron Brown. This is George Lee, a great trader from Western Canada who I have the opportunity a couple times a year to share the podium with. Van Tharp, position size and money management. And then one of the problems that I've had over the years is I can get a great list of stocks. I know when to buy, when to sell from a macro perspective, but when do I take the trade? Do I buy stocks or options? How big of a position? When do I put my targets, my stops? How do I do money management? And then some great indicators from John Person, and that's John here in a couple of his books. I use a lot of different programs. I need to have TradeStation and Thinkorswim. Genesis, to me, is a great charting platform, but maybe it's not for everybody since it's not inexpensive. And clearly, if you're not a futures trader, you can probably do without it. It does have a great scans, intra, and after day that helps me on equities. HGSI is my favorite go-to program for analysis of stocks. EdgeRater supplements that nicely. I do occasionally do seasonality, but frankly, technicals trump seasonality, and so I'm a little bit more cautious when the market is dropping like it has been. And then, like everybody else, there's a number of websites I use. This is High Growth Stocks website. I'm independent. I get nothing for you going there. I just pointing out the free 30-day trial without a credit card and also the investing strategies. I did have a couple people email me last week for my videos. I'll send them out over the weekend. I was traveling a lot when they came in. Stock patterns are cyclical. Last week we talked about that it really felt like for the first time in ages we were actually going to roll over and pull back, and we did. Now the question is, are we at the beginning of the sell-off? Are we at the end of the sell-off? Or are we just having a pause? And then just like over the last 2 years, we pause and go back up, are we going to have a pause to suck us back in and go back down? So I think a lot is dependent upon what the market does, obviously, and how you trade's probably got to adjust. And I'll talk a little bit about what I'm doing in a couple of slides. Now, Friday, strong day. Yeah, what a crazy day. I was hanging out with some friends, took a couple hours off and went on my boat. Oh yeah, people have asked for a picture of my boat. So since I took profits to buy this boat before the market rolled over, I may have to change its name from Boone's World after my dog to Perfect Timing. This is my whaler, and it's a great boat. And those that came to my meeting this past December got to go on my boat, which was a lot of fun. So, as you can see, positive day in the market. Everything's got green. Where's their collections of red? A couple of biotechs, I guess. The metals, the strong dollar has just been ripping apart the metals and oil. material strong, financial strong. And I basically watch this during the day. I actually have an extended one that has my holdings and buys, etc., to give me a sense of what's working and what's not working in the market. Now, I'm going to show you something kind of cool. I think it's cool. So these are the major markets. Let's go look at Thinkorswim. And let's take a look at what we see. Let's open up each of these, and I'll comment about what I think is going on. You'll notice that little blue thing here, strength returning in an uptrend, in a downtrend rather. So those are some volume spread analysis. Now, I'll also show you on my targets, and I'll tell you that my target for the S&P was basically where it closed, or where it traded down to on Friday, and then it had a huge reversal. So I look at the S&P, or the E-mini futures, a fairly significant sell-off of 350 points, down to 200-day moving average, and a bounce. Is it done going down? We'll talk more about that later. We look at the NASDAQ futures. Also a pretty substantial sell-off. Didn't quite get down to the 200s, but had a turnaround on Friday as well. And one thing I should have pointed out already, if you look at the E-minis, Tuesday was a big up day and Monday was a big down day. Wednesday and Thursday were not big volumes, and the upside volume on Friday, which was not a monthly or quarterly options expiration date, was pretty substantial. In fact, looking to the left, it's the second biggest volume. So maybe that was stopping volume there. So we looked at the NASDAQ. We look at the Dow futures, didn't quite get below the low from Tuesday, but also traded up on the day after trading down quite substantially. The Russell, boy, did this one stop like a dime on the 200-day moving average, and undercut and rally on Friday. A doji, to me, setting up for a high-close doji. On Monday, perhaps, and maybe IWM, the Russell may lead us for the next leg up. Now, the VIX clearly is high. It had another move up. But when I look at this, I don't see strength. I see weakness, something that's likely to go down. So perhaps the VIX is going to fall down after this shooting star-like. I don't think it's a perfect shooting star. The body's probably too big. And then the dollar, which has been tough. Looks like its ascent is slowing, and a falling dollar would be great for a lot of my holdings, and I think that this falling dollar here was a big driver of the market gains. So no big surprises there. We could switch to the weeklies, and I think all the weekly does to me is reinforces that we're still in an uptrend, I think. And you could see pull back to the 50 weekly, pull back near the 50 weekly, not quite to the 50 weekly, but clear-cut uptrends. You know, the VIX obviously had a big weekly move, closing off the highs, and the dollar, not so exciting when you look at the weekly. Now here's what I thought is kind of interesting. There is a feature in Thinkorswim that allows you to do inverse. So if I showed you this chart, if this was one of your stocks, and it moved down, came up here and failed twice at the 200-day moving average, what do you think is likely to do with that stock? It's likely to go down. So all I did by putting a minus sign before the E-mini, or how about a minus before the spiders, is show you the inverse of your stock. And when, this is what it looks like on the inverse. That's clearly running into resistance here, a shooting star, and I would expect it to fall over. If I look at the spider the normal way, it's the same exact chart, just flipped over. I think this is a place that you might put your stake in and expect a bounce. We'll see how much of a bounce and for how long, and I'll comment more about that as we go. On the monthly charts down here, and again, if you haven't been here before, this is from Genesis, and I like this because I have daily on top, weekly in the middle, monthly on the bottom. First column is the E-minis, then the NASDAQ, then the Russell futures, and the NYSE, and then the Dow futures. And when I look at the weekly charts, you could see that we did get on the Russell, we're in a monthly sell, The rest of the monthlies are still in buy, and frankly, it wasn't until this week that we triggered weekly sell signals. So we'll have to see what this market does. It's fallen hard fast, and to me, it's getting close to where I would certainly expect, whether it's based upon moving averages, changing momentum, where Friday closed, and I'll show you more evidence. It looks like it's at a place where a bounce is imminent. I'm just not sure how good the bounce is going to be. What's killing the market? Rates. Rates are higher, market's lower. So yellow is the market. This is the 10-year rates. This is the 30-year rates. I guess inversion of the yield curve, which we're not at yet, but you can see that the growth in the 10-year rates are faster than in the 30. So the short-term rates are going up higher. Regardless, the market turned down with them. And the AD lines, the yellow is the spiders. The white would be the mid-cap here, and on the right, the large cap. No divergence there. AD lines leading the markets lower. Here is a bunch of ETFs, diamonds, Qs, spiders, IWM, transportation, and they all turned down with the AD line. The laggard here is bonds, TLT. Now, breadth has gotten to where I expect a bounce. This is stocks trading above the 200, and where you get the sharp turn is where the market has historically bounced. Stocks trading below the 40. So we're getting to low levels of stocks that are above the 40 and 200-day moving average. Again, a typical place to expect a bounce. The 3-month new high, new low. This is a weekly chart. If I get down to the daily chart, you'll see that we were down around 0 for a couple of days. But what we're getting here is an area of which the market typically reverses from. Daily McClellan, impressive here on how low the oscillator got, as did the summation index. On the monthly, much less impressive. Not a divergence, not yet at an extreme, and we could do worse before we got better. So this is probably a sign of less certainty that we're going to get better. The buckets, again, another evidence of why I think this market is going to bounce soon. 93% of the stocks are to the downside on the buckets. That means they're below the midline of their Bollinger Bands in the S&P 1500. We're not as deep in stocks below the Bollinger Bands, but if you look at the lower two deciles and below, you're getting about 75–80% of the stock. So we're clearly at a place where a bounce is expected, and we probably already started that bounce yesterday or Friday afternoon. It was afternoon. There were no Hindis in the last week, but you know what? It's sort of a self-fulfilling prophecy. When the market sells off, you don't have enough new highs, and there are basically very few new highs on either the NASDAQ or the NYSE, and hence you can't get a Hindi without new highs. Market tone, well, you had 2 days of kahunas to the downside, 1 day upside, which would have been Tuesday, didn't make a difference, and we are in deep red here, which is the market indicator. Now, when I start to see yellow here on the bandwidths, that's heightened volatility, and I've seen that before markets have switched to the other side. I do think that if we can get a big update on Friday with a number of kahunas, maybe we could see some green come back. Right now, this is bearish, as is sector strength, where the only thing showing any life at all are utilities. So not a lot to like here. The market has certainly sold off and is weak, but evidence that we could be getting to a natural bounce point. Hence my initial comments. Talk about great evidence of a potential bounce. Here's the canaries. Canaries sold off hard, but look what happened on Friday. Right below the 50, clearly a reversal candle. It had a phoenix in the market, which is is a sign of a momentum to the downside. But when it occurs after the market sold off 10%. Could also be a sign of irrational exuberance. Look at the volume on Friday in these stocks. This is a reversal day. Get me above the 250 and a close, I'll be much happier. But that to me is a pretty impressive candle. And kind of pulling back to where it broke above the 50-day moving average. That's the canaries. What about the index of leaders I put together in June? Same pattern, more of a doji here, occurring right below the 50, a clear reversal day. And then, as you know, I put together an index to show me when the market was done. It was done 3 days later, pretty much. This was my melt-up index, and it did exactly the same thing. Sold off hard, and now looks like a reversal right under the 50. So, a couple caveats. The 50-day moving average can be a lot of support on the way up, could turn out to be resistance on the way down. So we have to get above these 50s. And that's one thing I'll be looking for. The other thing is, I like to close above it before I get too excited. I'm looking for that O'Neillian follow-through day or a eureka. So I continue with my worksheet. I showed you this each of the last 2 weeks. Here's the highs of the market. Here's the currents in the market. And in sort of this pinkish, this is how much we're off. We're off 8 to 10%, or 9.11 would be the most, from their highs. It may feel like Armageddon. It may feel like your world is over. It may feel like you lost all your money. The market's down 8% after a huge run-up. Here are the current moving averages, just to give you an idea of how far the moving averages are away from the highs. And here's the fib retracements. Here are the distance to my initial target. Well, my initial target in the medium scenario for the S&P was 27.13, and we were way below that. What's interesting is my low target, which I calculated when I started this a week ago, was 25.3241. You look at the low since the correction, it traded down to 25.32.69. So it was down 13.43%, and it rebounded dramatically. It's 3.58%. Excuse me. Don't say that. Let me get this right. It is up from my target. It's moved up to about 87 points above where we started, so 3.5%. So that was my target. It's been hit, and we bounced. Here's the same analysis across the board. On the IWM, we hit it and bounced. On both of the Dow and the NASDAQ, we did not quite hit my target. You can see the lows were about 13% down, and we're currently about 8.5% down. So all of them bounced off the low, not quite getting to my target except for the two on the outside. Now, I shared with you some of my long-term analysis that I do that keeps me in the market. These are some weekly MAs done on the major indexes, and yes, they're late. Yes, they're delayed. Yes, by the time they give me a sell signal, I've started to lose money. It doesn't mean I ignore my portfolio. But as long as the green short-term moving average is above the yellow intermediate moving average, which is above the red, I'm in buy signals. So I still have my long-term buy signals despite the short-term market damage. I can go to my monthlies where I have two moving averages, and as long as green is above red, I'm still in an uptrend and bullish, and there it remains bullish throughout. And then I shared with you this, sort of my secret chart from last week. And has there been damage? Sure, there's been damage. The market's down 8.5%, 9% from where it peaked. No kidding. Yet, my moving averages have not rolled over at all. The MACD is still way above the zero line, although the blue is crossing down below the red, which could be an early signal to be concerned. So the long-term bull is still intact. So this is in a very important paragraph on the bottom. This should not suggest that I ignored the sell-off. To the people from my live meetings, I was not sitting on my hands last week. I've tightened stops, I have less positions, and I took profits. I was long volatility on Monday. That meant I was long the VXX and short the SVXY. I got handed a gift when the SVXY cratered after Monday. I also had index puts and puts on some of my positions. I also sold, for example, sorry about that, on my Amazon position, I had sold some at the money calls. So that is a short position. So I feel pretty good that I survived, sort of intact. Was I down last week? Absolutely. Am I still up 20% or more for the year? I am. Part of it is because I took profits. Guess that's a message. Know your news and your earnings, but I was up a lot more than 20% 2 weeks ago. Know your news and your earnings dates. Those remain critical. A lot of good earnings this week, Pepsi and Baidu. Some insurance companies, Applied Materials, Marriott International has been on a tear this year, Cisco Systems, John Deere, Coca-Cola. As I say in the lower right-hand corner, it's judgment call to hold stocks over earnings. It is bad judgment to not know when your stock's earnings date is scheduled. Over on the left are some of the major economic events from this week. You know, the Baker Hughes rig count really impacted on the price of oil on Friday. There'll be some housing starts and retail numbers. Bond auctions also hurt the market this week. Thursday, there'll be jobless claims. You got some business inventories. It doesn't look like a horribly busy week for news, but there are some major earnings that will be market moving. So, what are my thoughts? Markets suffer through the worst week in 2 years. Shocker. Cut and rally, and I'll talk about that on Friday. Finish off at highs of the day, yet significant. Finished off their highs of the day, yet a significant positive finish. I don't think I've ever seen a day where the market was up, down, and we're not talking up 10 points and down 10 points. The Dow was up 400 points, down 400 points. We were sitting at lunch with one of my friends who's a trader and say, all right, at 3 o'clock, the market was down, 3:30, I think it started turning. And I said, do you think it'll be up 500 or down 500? Just the way the market was. It was a positive day. Rising rates and chance of more hikes than forecasted are clearly spooking the markets. We cut through my middle road scenario, bounced off the low road. Will it hold? We'll have to see. Still in the midst of earnings seasons, but may see a rally this week after the high volume reversals at the 50-day. Looking for a eureka, a signal that the markets have been put in a temporary bottom analogous to a canceling follow-through day, and still sense high risk, and any rise might be met by selling pressure. Usual agenda. Let me show you a couple of other things. I don't normally present the Commitment of Traders report as I learned from John Person very often in this, but today there was something that I thought was very interesting. So let me just give you a little bit of taste of what we're looking at here. You have the red arrow down is a person PPS sell. The green is a PPS buy. Big shocker. The little dashes here are monthly or quarterly pivots, I believe. Are they quarterly or monthly? Well, it's easy. There's 12. They're monthly pivots. Let me see. It's been so long since I put this together. Let's take a look. Let's edit studies and see what the pivots are. Quarterly pivots. I was right in the first place. All right. And on weekly charts, so you'll get 12 each time. Duh. All right. Down on this one, we have the Commitment of Traders report, which I'm going to come back to. This is his histogram, and then this is on balance volume. So let's just not forget about these, but we're not going to talk about these tonight. We're going to talk about the top two things because it's kind of cool. Let's go and take a look at 2009. Some of you may remember that. That was a painful time in the market, well, 2007, 8, 9. So, come on. My problem with this is, and this is the new version of TradeStation. It looks different than what you use. It's cooler looking, but boy, it's quirky. I don't think it's been released for prime time yet, and I have a lot of bugs with it. So, but it's definitely cool looking. So let's go to 2008, 2009. You notice that in 2008, the market's falling hard. You notice that the yellow bars are net positive, future contracts. The blue bars here were net negative, and we're going to ignore the red line. The yellow bars are individual are the amateur speculators, us. The blue bars are hedge funds, banks, brokers, the experts. Isn't it interesting, during the fall of the market to 2009, we were long the entire way down, and the experts didn't go long until late in 2008. Well, that's interesting. And then in the biggest run-up of history, it's predominantly the experts being long and us thinking we're smart by being short. So we're typically wrong. Look what happened here. The professional speculators are very long, and the individuals are short or out of the market. That's probably a contrary signal that says the market's going to go higher. Let's take a look at some of the technical damage that we saw using my TradeStation indicator set. If I go and I look at the E-minis, and for those that are new, I look at 6 things here. 1, is it in a buy or sell daily, weekly, monthly? So long-term buy, daily and weekly is a sell. Number 2, what's the color of the candle? These are like a momentum, a shorter-term momentum signal that is the Alexander Elder impulse indicator. When it's red, I should be shorting or holding. I shouldn't be buying new positions. When it's green, I should not be shorting. I should be long or holding. When it's blue, it's neutral. So blue, red on the weekly, blue on the monthly. All right. I use it at extremes. Right now, it doesn't tell me anything. Where am I in the envelope? Well, we are now way below the lower envelope on the E-minis on both the daily and weekly. So we have worked off the overbought condition. That tells me we're probably more likely to go up than to go down from here. I look at the weekly bongo turned red, which is disturbing. That's my buy-sell indicator, the timing indicator. And then I look at the high jump bar. Those who have been listening to me know that every week I've been telling you the high jump bar is at close to 100 and that it's going to come down. Well, it's no longer at 100 anymore. So I look at the E-mini, it's totally beat up. To me, it looks at a position I'm expecting it to get ready to bounce from, mostly related to the high jump bar being so low and being so low below the outer, the elder envelope. If I look at the YMs very quickly, my similar pattern, also way below the envelope on the daily. Very similar, again, I think looking like it's going to bounce soon. Very soon, like Monday or Tuesday. NASDAQ. Similar story, getting deeper and deeper below its envelope. The Russell 2000 futures, which we actually have in TradeStation, but not in Thinkorswim. You've got daily, weekly, and monthly sell signals. The U.S. dollar, which has been strong and I think hurting some of my positions, continues to look okay. And these are some. This shows some bullish divergence or convergence, which suggests it's going higher on the weekly as well. I'm not convinced on the dollar. I'll show you why when we look at the HGSI charts. The VIX, we talked about it being high. It came off 13% on Friday. It's a big move from where it was. It's probably still going to come down. But another leg higher on the VIX will hurt. And, a high VIX in time to buy is true if the VIX is falling. But when the VIX is going up, it's hard to be buying and making money on the long side. Unless, of course, you're buying contra ETFs. And just take a quick look at gold here. Gold struggling with the rising dollar in a sell signal. So I always look at that. Let's take a look into HGSI. Let's go into Woodward & Brown full. And let's open it up and go to Major Markets Plus. Hit the warehouse view. And top-down view. And rank them. So this is the rank on Friday of strength in the U.S. markets. The dollar at the top is never good for stocks. Historically, maybe it's good for the country, but my stocks do better when the dollar is not at the top. So let's take a look at the individual components. I'm going to use a cleaner chart. And what do I see here? Let me make it open. So a couple things to show you, and it looks a little bit different than the futures. When I got on the boat with my friend who's a trader, I said it looked like the market was going to trade up on Friday. And my comment to him was, boy, I'd really hope for an undercut and rally, because to me that's a stronger evidence that we're going to see a reversal. What did we see? It opened here, up from here. Pull some markers out and play with them. So it opened up a little bit less than 21 points. It traded down here. So at one point, it was from the prior day, it was down about 53 points or 2%, and then it rallied off the lows and closed up on the day. To me, that is a bullish reversal. If I ever saw one, it occurred after Eureka, the high jump down to a low jump area. It would be nice to see a Phoenix pop into this market. It's not a Phoenix, a Eureka, which would be the follow-through day. We're sitting at about the 62% retracement from when the up move started in September. I like this, and again, if I flip this chart inverse, you would be telling me that was a shooting star and it's coming down. So, all right, that's the S&P. Dow Jones Industrial. Undercut, rally, not more else to say, didn't quite get down to the 200. And the NASDAQ Composite, undercut, rally, just stuck its head down into the low road scenario after it blew through the medium road scenario and then had a pretty big reversal here. That's a major reversal candle. Yes, I'm bothered by the red weekly bongo, and it was on strong volume on the reversal. So it basically traded down to 76.4% correction of that move. That's a big correction. And then lastly, the IWM. And the reason why I look at the IWM and not the Russell is because HGSI doesn't have the Russell anymore like many of the other indexes. And a similar story, an undercut and rally closing here. Pretty deep extension of this pullback down to 161.8%. Wow, that's a huge pullback here. The weakest of the bunch, but again, closing with a doji, and I think that's pretty cool. Now, and a big reversal. Let's go back to the S&P 500 and just use this as a proxy of the market. Let me go down to this chart because it won't have all that stuff on it, I hope. Perfect. Bump, 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 bump. I don't know what that chart is. Take that one off, this chart. What I wanted to talk about is make my little box. Here's the problem that I see with this market. That is the box of pain. Anybody that bought into this market since late November is losing right now. So what's going to happen from here? Well, it's an interesting question. Let me see if I can give me some more space. By the way, there's not a lot of stocks to look at today, so I don't have any problem doing this. So what are the possibilities? The bull scenario would say, and I'm not necessarily agreeing with this, that we're going to get a V-shaped recovery and we are going back to new highs. I would say kind of the Aerosmith song Dream On would be appropriate. Okay. The bearish case scenario would say that this was just a fart. We're going to fail at the bottom of the box and we're going down. I think that's equally as unlikely. Let me extend that 50-day moving average a little bit. I'm going to pretend it's going sideways because it's starting to go sideways. What I think is possible is that, we'll go in with a blue for the intermediate, is that we do this. And base for a while underneath that 50 before we ultimately break above. So what is my high road scenario? My high road scenario is we just do a V-shaped and we go to the stars. I don't think that's likely. My low road scenario is this is a false reversal and we come back down here and we set new lows. Heaven help us if that happens. People couldn't handle 8% down. What's going to happen if we're 20 or 30% down? I won't be in the market if we break below this 200. And I'll talk about setting stops in a second. And then the most likely scenario is that we probably have to fight a little bit because this 50 held for a long time. Do we have to fight to break out? So we'll see. I think this is what happens. We go sideways around the 50, above or below, work out some of these people that are pissed off that they were last ones in, and then we break out to higher highs. What about stops? I think that it is fair to say that this here is probably a line in the sand. That's not what I wanted. Let me change that. And by a line in the sand, I mean that has got to be big support here off this 200. If we break below this 200, I don't know where it's going to go. So I'm looking at my existing positions. I'm looking at the low of the day on Friday, and I'm moving my stops up to the low of the day on Friday. If I'm right and we're going to move up to the 50 and bounce around, none of those stops will be hit. But if this market's going to drop down, I don't think I want to be long very much anymore. So market is at a crossroads, and it doesn't matter what I look at. If I look at the NASDAQ, is it any different? Yeah, it didn't come down to the 200, which would have been cute. But look how the 50 and then the 17 were support on the way up. Sometimes the better the support is, the more difficult it is to get back up later on. So that's what I think about the markets. Let me fix my chart. Notice where I did this in HGSI. It's kind of a cool ability to do that so I can play around with the right-hand side. Awesome, 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 awesome. For completeness sake, we said the dollar has been strong of late, and you can see the dollar has moved off of its lows. I don't know why that did that. But you look at a longer time frame, the dollar's been very bearish. Is this a reversal here that's going to matter? I think the dollar's got the same problem as the markets. There's probably a lot of overhead supply on the way up to that 200. And I think it's going to be a lot of work to break above it. And the VIX, which we talked a little bit about, still in the middle of the track, is the VIX coming down? If that's the case, then the market's probably going to go higher, or does the VIX have another leg up? I look at this and I see this tail up here. I think the VIX is coming down. We'll see. I have to watch the VIX closely. And as I mentioned before, the dollar has been stronger. The gold has sold off, and as has silver. Now, a place to have been in this market has been copper. And I'm going to watch this if the market stabilizes. Here's a stock that's right below the 50, Freeport-McMoRan. If we start to take a look a little bit at their numbers, they got amazing earnings per share growth compared to their PE. This had been a big winner. I'm not buying it yet, but a close above the 50, I might be interested, especially if I get a kahuna. So, again, probably will do better if the dollar is weak, but may respond to some strong numbers in China. So hopefully you now have a good sense of why I think the market may bounce. and that's because of the reversal on Friday where the indexes, where my canaries and the indexes are falling. But I am concerned about the overhead supply and how much work is it going to take to get above it. Continuing on, I'd like to look then at the industry groups. Hit the warehouse view, and you see we have 174, and no shocker, Friday flipped a lot, and we had 38 groups move to the upside. This compares with, to the downside on Friday, we only had one. If you look at 5 days to the downside, this is where it's kind of remarkable. We have 90, and 5 days to the upside is, let's see, not that. You have 5. So short-term momentum over 1 or 2 days look pretty good to the upside, but really intermediate term, this market is still a weak market. If I take a look at these, what came to the top? Semiconductors. I right-click on this, change industry group. NVIDIA had great earnings. So let's just take a look at a couple of these. NVIDIA traded down, closed on the 17, did have a pocket pivot in Kahuna, a viable gap up and out of a squeeze, but it closed back in. If there's a leg up, NVIDIA will probably do well. I'm nervous that perhaps the earnings might be slowing down, so I might want to take a look at that. I think that was the quarter that just came out, so it may be irrelevant, but interesting with great earnings, it couldn't keep a gain. Qualcomm got a higher bid from Broadcom, traded up on this, really didn't do much the rest of the day. Intel, weak. And then here's Broadcom, which put in a higher bid on Qualcomm and was told no. So I don't see things running out to me and saying you need to buy me. REITs had been weak, but all of a sudden they're the number 2 group. So let's take a look what we got here. We got Simon Property Group. I'm not interested because it's shopping centers. Bouncing off the bottom with a pocket pivot in Kahuna. After a bingo, great earnings per share growth, pays a 4.7 dividend. I was in a major shopping center that they own today, and I just don't get it. There's nobody there except the Apple Store. Public Storage, I use one of these on a monthly basis, 4.3% dividend. It's where I stole my baseball card collection. Anybody want baseball cards? Oh my God, the world's worst investment. I have every card from like 64 to 2003 when my son turned 25 and said, Dad, I'll never want your baseball cards. Stop asking me. So they're sitting in storage if anybody has interest in baseball cards. 4.3% dividend. Again, lousy pattern. I'd be more interested in this because I see how the public storage, those place where you keep your junk if you don't have a garage, is attractive. Pocket pivots in Kahuna, but it's still in a downtrend. Equinix, downtrend, Essex Property. Do any of these look like charts that you like? Not me. I mean, they're all downtrends. Here's another one of the storage places breaking above the 200. Great earnings, 3.9%. Yeah, I guess the story here might be a dividend play, but they have been weak. Infrastructure software. FireEye had great earnings. Let's look at the first 4 or 5. Fortinet came up on a bunch of my scans as well. So Microsoft uptrend pullback sitting on the 50. Did have a Kahuna. It's an interesting place here. Earnings per share growth slowing down. You know, in an uptrend, this is when I like to, in a strong market, this would be a buy for me. It's not a strong market, so I'm going to be cautious, especially with the bongo coming in. But it's going to be on a list that I'm going to watch. FireEye, great earnings. You could see a Bible gap up and then sold off, and really during the day traded down quite a bit. So it is up a lot on the day. Everything turned green up here. That might be one to watch. There's also some potential corporate actions there. Imperva broke above the 200, pocket pivot Kahuna, Bible gap up, mobile breaker for squeeze. I don't know this one from Adam. Not a lot of shares traded, that's why I don't know it. Fortinet at least looks like it's in an uptrend, gone sideways, and it had a mobile breakout from a squeeze, pocket pivot in Kahuna. I like this one the most. It's going to have some earnings coming in. Don't like that picture there. Big PE. Fortinet looks interesting in this group. All right. So a couple of uptrends. Integrated utilities, boy, when these are in the top, I know I'm not happy. So utilities were the one sector that turned yellow this week. They don't do well with high interest rates either, but they do pay dividends, 3.3%. Yeah, it looks like a bottom, but if you like chasing bottoms, Pocket Pivot, Kahuna, after a big sell-off, 3.3. Duke Energy, just as bad, 4.7. Southern Company, ditto, 5.2. Do I think they're going higher? Yes, I think they're going higher. They've been beat to crap. They've had multiple bongos, but I probably would have thought they were going higher here and here as well. I don't like chasing things that are so far down in their program, even though they got great dividends, and none of these have attractive charts. All right, well, that kills that idea. All right, banks. These will be the regional banks. So this is interesting because do I want to buy SVB or short it? So here is a stock, and this is where my concern is. Super strong uptrend, very expensive stock, sold off quite a bit, now is going to struggle with that 50-day moving average. If the stock fails at the 50, it's called what David Elliott used to call an ice hole failure, and then I expect it to come down and test the 200. If it breaks above the 50 and takes out the PSAR dot, maybe it takes another uptrend. It's got great earnings. It's a regional bank. They'll benefit for decreased regulation, lower tax rates. So this is one that could go either way. I'm certainly not going to buy it on Monday without seeing anything. U.S. Bancorp, no. BB&T. Similar pattern, pulled down to the 50. Give me some momentum, so I'm not ready yet. So Fifth Third, same thing. There was one I put on my buy list. A couple I like. TCF. Same pattern. 1.4% dividend, good earnings per share growth. You know, I might even put, if my buy stop was above the PSAR dot, that's going to require a significant move. And then the other one I like was BOFI. Sitting right above the 17, BOFI Holdings. All right, continuing down the list. I heard some good things about Comerica. They gave me my med school loan, so I always have a fond part in my heart for them. Of course, the bastards charged me 17% interest at the time. Bygones. Turned out to be a good investment on my part. Great earnings per share growth. Twice the PE, 1.3% dividend. The same pattern as everybody. Now, what I like about this one is I don't see this one going below the 50. It's held the 50 3 different times. If this group moves up, this might be a good one to look at. CMA, I'm going to throw that into my buy watch list. All right, just going down the top 10 lists. Tobacco index, change the control group. I don't buy, those who know me know I'm an oncologist by training, a cancer doc. I can't buy tobacco stocks. And they kind of look like REITs. Down in the dumps, pays a nice dividend, but way down in the pattern, not interested. I don't chase that pattern. Large pharma, that was interesting to be, J&J, catching a lot of heat about talc and baby powder. Why would I buy this pattern? Because it had an up day on Friday. No thanks. Does have a good dividend yield, similar to all the other ones that popped up. AbbVie, this is my favorite. Go back and play my videos from August, September, October. This has been my favorite biotech for years. Why is it my favorite biotech? Because it grows like a biotech and it pays a dividend like Big Pharma. It's pulled back off its highs. If the market trades higher, I want to be long AbbVie. I like everything about AbbVie, the company. It's a great story. And I'm not under NDAs with them, I don't think, so I didn't say anything bad. Eli Lilly, no thank you. Pfizer, I do have a position, this one, which I thought it was going to bounce off the 200. It's sort of doing nothing. That'll be a loss. Steel and raw materials. Vale, as I said earlier, China, I think I said it, had their imports were up, which is good for these companies. I don't mind this pattern, sort of a cup pulling back to the 50 and a mobile breakout, a kahuna out of a squeeze. Makes money but diminishing earnings per share growth, miniature PE, a lot tied to the strength of Brazil. I would have no trouble if someone said to me they wanted to go long here. I just realize that that box has some likelihood as well. And so I probably would have my stop below that 50 and not let it get away from me. Rio Tinto, same pattern, 4.4%. BHP, these look very buyable here. Good dividends. Unlike the REITs and utilities, they're above the 200, they're above the 50. Now this one, I'm not sure what group it's in now. Tech has been getting a lot of interest this weekend as well, and several things I read, because it has a big zinc, iron ore, and others, and you could see it bounced off of its 50 with a kahuna, and this is a pattern I like. Again, the market's kind of dopey right now, so I'm not sure I chase anything. Oil and gas services, boy, have these been hammered. So you have one stock driving it because it was up 19.5%. So whenever I see that, if you've been here before, first thing, it's got no shares, so I would never trade this. I like at least 500,000. Some people are happy with less. My problem is it's easy getting in, it's hard getting out. And if I look at FinViz, so it's up based upon its earnings, I guess. Earnings are out. I just get nervous when I see 203,000 shares. Now, I did trade 795 on Friday. From a pattern perspective, base, breakout, cup, and handle breakout. 3 kahunas in 5 days, a buyable gap up, everything green there. It's beautiful, but it's also got only 200,000 shares traded per day. I call that out, probably one of the better patterns we've looked at. And then more utilities, I'm not going to look at that. Diversified banks, as if you've been here before, you would know that I have a pretty substantial position in Bank of America. Those who've been listening to me back, I've been doing these since probably 2005. These were the fun ones, because in 2009, well, if you wait down here, in March of 2009, when the market reversed itself, Bank of America was $3 or $4 a share. Yeah, I know that was 10 years ago almost, but it's now $30 a share. That's a pretty nice move. Sitting here on the 50, reversal day on Friday, earnings per share growth are getting better, pays a modest dividend. I think this whole group goes higher. I'm a fan of Bank of America, JP Morgan. Let's look at some of these very quickly. Similar picture, Citi. Similar picture. The one that doesn't look as good was, hold on a second. There's Citibank. A little bit below the 50, not as good. And Wells Fargo, this is the dog. This one is almost being broken up by the Fed. That's one I wouldn't be in. So I've gone through the top 10 groups. I talked about where I thought the market was doing. I'm looking for a bounce. If the market bounces strongly, everything's going to go up. The question has to be, and this is what you got to ask yourself, if we get the bounce, and I think if is still a fair word, go back here. Are we going to do a V-based bottom and go to new highs? We've done that before, guys. Summer of 2016. Let's take a look at this officially. 6% correction, went right back up. So, okay. All right, so that was a V bottom. How can we forget August of 2015? This was a correction of 10% in 4 days. Kind of feels a little bit like this thing did, didn't it? And it took, to get back to where it started, 44 days or 2 months. All right, so this is probably more typical. Here's another pullback. So the guys that tell me that we've been in a bull run since March of 2009, were they sleeping in 2015 and early 16? Because that doesn't look like a bull market to me. Maybe officially it wasn't a 20% pullback. Let's see what we got here. There was a 14% pullback. So V-based, I doubt it. Right back down to the bottom of this box, I doubt that too. I'm betting on a rally up until support, or excuse me, to resistance, which used to be support on the way up, and that will take a little bit of consolidation to break above it. That's what I'm planning on doing, but I'll be looking at the futures on my iPhone at 6:15 at my club on Sunday night after they get updated. Talk a little bit about my buys for the weekend. There aren't many. In fact, I could say, probably should say there are none. But I did come up with some stocks that I thought looked interesting. The funny thing is, a couple of them were the same stocks that I had last week, which I don't think I went over them. So I'm just going to call out the ones I like the best. And there's not many here. There's a lot of bottom fishing again. So let me show you a couple of the stocks that I'll be watching and buying if I think this market is turning around. Netflix. I made some people a lot of money. My favorite was somebody sent me that he was up 370%, 307% the day after earnings came out. He's never had that kind of a move. I hope you held it, because this gap up got you to there, and then it got you up into the 280s. I'm out of Netflix right now, but I want to go back in. I look at the forward-looking earnings per share growth. I love their story. They got a moat called content. I think the long-term is a great story still, but I have to let this market sort itself out, so I'll be watching Netflix closely. Rising rates should be good for insurance companies. So this is one that I looked at last week. I didn't pull the trigger. I'm going to look at it again this week. This is XL. There was also some M&A discussions, which helped to push it up. It's got earnings, pays a dividend, and they should be a beneficiary if the interest rates continue to go higher. Pieris Pharma is a small cap biotech, doesn't trade a lot. I actually had a position in this. Why would I have a position in this? Because if you look back here, you had 3 kahunas in a row and a breakout from a squeeze. And if you go back and look at some of my videos, you'll probably see the day I bought it. But I was just sitting on it. I should have sold it, but it didn't do anything during the pullback. And it broke out on Friday that they did a transaction with Seattle Genetics, an investment. So that's a positive to me. A lot of these are stocks that I've been watching that I'm not ready to buy. I showed you Freeport McMoran. This technology stock, it looks like the REITs that I said I wouldn't touch, and therefore I'm not in it. This one had gangbuster earnings that came out that were just reported. Look at these earnings per share and look at the multiple. If this market ever stabilizes, I'd expect Excellis to do another run like it did last August. But I got to wait for the market to turn around, and I got to wait for the chart to turn around. Why do I put it on a watch list? So I could watch it. WestRock, that was another good-looking chart if you want to buy containers. It's a boring industry group. No, this wasn't that good. Check that. I don't know what I was thinking here. Am I still? Make sure I'm not on a weekly. I'm on a daily. There's a reason why I like this, and now I look at it, I couldn't tell you. Maybe it's earnings per share growth. If it's done going down, it might be one goes up. I don't know why that one's there, so forget it. And then this is another one that I was in last week. I covered on Friday. This is TZA, and this is a direction 3X. It will go up when the market goes down, and you could see over the last number of trading days, so this would be January 24th, that direction contra ETFs, had you gone long this here and sold it here, would have been a 40% return in 12 days. There are a number of these you can play. You can play QID. Similar pattern, big move off the bottom. SPXS, short the S&P 500. DOG, the Dows of the dog. So these all have gone up while the market has gone down because they're negative ETFs. So you need to know about those. That's one way I like to play the downside. So this was a rough week we just got out of. Maybe I'm too optimistic, but in my mind, we're due for a bounce. We had those long-legged dojis right below the 50 with huge reversals across the board. I think we bounce this week. I don't know which day we bounce. Is it Monday? Is it Tuesday? I don't know if we can bounce up to a new high. My guess is we're going to have to struggle with that 50-day moving average. On that note, I'm going to say goodbye. Thank you all for your great emails of thanks and comments. I love the comments about how much people made on the Netflix trade, but I also like the comments that people recognize what I do with the market analysis, because frankly, if the market is up 500 points tomorrow on Monday, does it matter what stock? Probably not. And if it's down 500 points, are you going to be making money on your longs? No, probably not. What mattered? Well, what mattered was the market. You all have a great Sunday, and hopefully I'll do this again next week. Thanks, everybody.